Okay, guys, we're going to go ahead and get started. We have Rob Vance, a CPA and financial professional who left us for a little while but came back because he just missed us so much. He's going to do a presentation on understanding the most common forensic accounting issues encountered in a divorce. I also want to let our webinar attendees know that I've entered their names for the drawing, so thank you guys for participating. Also, if you have any questions during the seminar, you can call the bar office at 527-3573 or send Lisa Beach an email, and she's going to be checking your email on the hour. So you can get in touch with us that way. Or you can shoot me an email, luciebracken@yahoo.com, LucieBracken@yahoo.com. Thank you.
Good morning. How is everyone doing so far? Good. John and his crew are a little too smart for me. That's I've gotten to know him. They do a fine job. I'm happy to hear them speak. I'm going to have to sit down. Apparently, I like to walk around and make noise. But apparently, they're going to make me sit here because we're filming it. And you people at home want to be able to see as well. So why am I talking about forensic accounting? Well, I think that those of you who have had issues in your divorce cases realize that forensic accounting is important. And forensic, all that means is it's not necessarily digging out the dirt on somebody like maybe John and these guys, but forensic just means to be presented in court, and that's most of what I do is to actually make analyses, calculate alimony, separate assets. All those sorts of things that you encounter financially is what I do, and then sometimes I testify if I have to, and sometimes I don't. But I have a website, which most of you probably know who know me. It's forensicval.com, and I had some analytic software on it that measured some of the requests and the hits that I get. And also, I sent out a survey to a bunch of attorneys, which some of you probably got that. If I know you well, you probably got that request from me. And I said, "What do you want to hear? What do you want me to talk about?" And I had several requests come back in. And then I looked at what the search engine terms that people use to find my website, which I thought was really interesting. And a lot of people want to know, and these are your clients, and these are attorneys. They want to know about income issues. They want to know about K-1s. They want to know about W-2s. They want to know about guaranteed payments if you're an LLC owner. They want to know how to read a tax return because, what's the first thing you ask for in your discovery? It's the tax returns, right? But do you know what you're looking at? Okay. The second thing you may ask for, give me all your brokerage statements for the last 3 or 4 years. Give me all your bank statements. Give me everything having to do with an IRA. Give me everything having to do with your 401k. And these are all things, and I got just multiple requests on my website where people were searching for that type of information, and they land on my website. So I said, well, if it's relevant to them, and that's your clients, and it's you, that's relevant for me to talk about. So that's what I'm talking about today. I'm going to talk about how to read a tax return briefly, how to read a brokerage statement. And I've got a real complicated one that's from an actual case, and I hope I've redacted all the names from that. An actual brokerage statement. And it's really complicated. This guy traded hundreds of millions of dollars a year, and so this will be an interesting one to look at. And then I've got, these are all from actual cases. Someone sent me some information about an IRA, or all these different retirement plans, 5 or 6, 7 things, said, value this, Rob. I don't know what I'm looking at. This is a guy from Knoxville. And then I also, one of the other big issues is valuing pension plans from government agencies. And I've got a couple of samples in here, an active case, or a rather recent case. The wife and husband both were civilian employees of one of our branches of the military, and they each had a pension, but they had different pensions, and the information that they gave me looked the same, but they were very different. And I'm going to point out some of the problems with these documents, and some of this stuff may be beyond what you want to deal with, but I want you to know what your limitations are. Just like I know my limit. I'm not a lawyer, and most of you are probably not accountants, so if there's some limitation, maybe I need to ask Rob, or I need to ask Chip Marston or Alex Albee and some of these other guys that everybody uses in town. So let's get started on the tax return, and you're welcome to stop me and ask any questions at any time. There are no dumb questions because I realize that most of you probably don't do your own tax return. Is that right? How many in here actually prepare their own 1040? Well, you don't count because you're a financial professional. You do your own.
Does TurboTax count, or does that count somebody else?
This is TurboTax that you're looking at right here. This was produced by TurboTax. I use TurboTax, and that's okay. TurboTax is good. As long as, garbage in, garbage out, as they say, right? All right. So let's look at this as a tax return from John Q. Public. I'm not going to go through every single line, but if you see something on that or interests you, let me know. And you do have a handout here right in front of you, and I've got the pages numbered. So if you can't read this, which I can't, I'm this close and I can't even read it. So, but I'll try to flip through it here for the people that are on the webinar. Okay, on page 1, this is Form 1040. I'm going to talk fast, and I'm going to be looking down here too. So yell if you want to ask a question, just yell it out, and then I'll call on you. All right. So what we have here, John Q. Public. He lives on Elvis Presley Boulevard, and this is Form 1040, page 1 of Form 1040. It has 2 pages. So whenever you're requesting a tax return, always request the Form 1040 with all schedules, because this actual tax return probably has 50 pages attached to it. Now I've truncated a lot of it off here, so because the TurboTax produced a whole bunch of pages, which are the ones that go with it. But you need all those schedules, and I've only put those schedules on here that I think are relevant. Just a summary of what's here. We got W-2. This cursor's not working. The W-2s for husband and wife, if they're filing jointly, which they are on line 7. We got interest, we got dividends, line 12, business income. This is sole proprietorship. Each one of these has a subschedule, and you'll see it off to the left. It says attached Schedule B, attached Schedule C, and we're going to go to those briefly, and I'll explain what those are. Then we have a capital gain schedule. Now, the $15,409, that capital gain, that's the net gain. So we may have losses and we may have profits, and we're going to talk about those. And the brokerage statement we're going to look at does not tie into this tax return. I just didn't have time to do that because it had about $300 million of transactions on it, and I just didn't have time to tie that into here. So don't be looking for that. And then this line here, line 17, this is a catch-all for a whole bunch of different things. It's the Schedule E. And you'll look, it has rental real estate, it has royalties, it has partnerships and LLCs, S corporations, trusts, and even farm rental income dumps into Schedule E. It's a very important schedule. And Schedule E, like many other IRS forms, brings in information from other forms. So there are subschedules of subschedules and other forms that come forward to like Schedule E, and then it subtotals on E and comes forward over here to page 1. So that's what you're looking at. Pretty much anything you got a number here for is going to have a schedule, or it's going to have a W-2, or it's going to have some kind of document that backs it up. And we're going to go to each one of these schedules, and we'll come back and you'll see where each number comes from. We're going to go down the page a little bit. So here's your total income subtotals on line 22. Then we have a few subtractions, and one of these is for alimony gets deducted right here. This guy didn't have alimony, fortunately, not yet, because he hadn't divorced yet, but he will be. But he does have a deduction here for a self-employed SEP or a simple or a qualified plan. So when we have a deduction for something that says retirement plan, what does that mean? We have an asset sitting out there somewhere with some kind of statement, some kind of balance. That is one of those, a SEP, which is a simplified employer pension, or a simple, which is another type of retirement plan that the IRS put in about 10 or 15 years ago. And other qualified type plans. These are things that this guy's contributing to, or it could be her. It could be her plan, but we don't know that yet. So there is a plan out there. Now that's you're usually going to get someone usually isn't going to lie and say I don't have a SEP IRA, and they do. They may they'll tell you all the information about it, but they're not going to lie that they have one or not, because it's really too easy to find out whether you have one or not. These days, I think. Okay, we're going to move on to page 2. I'm not going to really talk about page 2 at all, because there aren't any subschedules that interest us on this. Oops. Other than down here we have withholdings on line 61 and 62. Withholdings, that's withholding from a W-2. And then we have estimated tax payments. In this case, $68,500 were paid in. And another thing that you can do if you're trying to cheat the other spouse and you know you're anticipating divorce and you have to make estimated tax payments, which are how a self-employed person pays their tax. They don't have a self-employed person or an LLC member or a partner doesn't have tax withheld out of their checks, so they got to write a check and mail it in to the IRS or electronically transfer it. One thing that people can do is they can make too many payments. If they think maybe Leslie Coleman's not paying attention, and they write, they claim here only 4 checks of $15,000 that they put on here, but actually let's say they wrote a 5th one or a 6th one and mailed it into the IRS. Okay, knowing that they're going to file this return, and then maybe a year later the IRS catches it, and the IRS is pretty good about that, actually catching overpayments or underpayments, of course. But if you overpay them and say I only sent in $68,500, but you really sent in, $100,000, the IRS will send you a love letter and says, oh, by the way, you overpaid. You get a refund, and they may even give you interest on it. So that is one way people can park money, is paying in too much on estimated tax. Then this particular person owes $10,166 with the tax return. All right, now here's our first subschedule. This is Schedule B. You always want to look at this one, interest and dividend schedule, because if we're earning interest and dividends, obviously we have an underlying asset that is producing that. Correct? All right, in this particular case, we got First Tennessee Bank, we have Big Bank, ABC, and then we have overseas accounts. How often do we get lucky and have somebody actually say, I've got overseas accounts? So I put that in there just for dramatic effect. And this is the interest section. And $3,892, you may remember from page 1, that's the total of interest that's taxable to them. Now that's only the taxable interest. They could have tax-exempt interest as well, which is supposed to be on page 1 of the 1040. A lot of people don't put it on there because it is tax-exempt. But a tax-exempt, and that would be like a municipal bond, like municipal bonds. Bonds in the state of Tennessee, bonds in the city of Memphis, that sort of thing. Those, they produce, obviously that's an asset, that's a marital asset probably, but it's a non-taxable income asset. So some people don't put it on the 1040, especially if they're doing their own tax return on TurboTax. They may not put it on there, but that is an asset. Keep that in mind. So this is only taxable interest right here. Then we have dividends, and this $17,673. You'll see that's also a subtotal line 9A on the tax return. And I guess of interest here, let's see. We got an E-Trade account. We got a Schwab. Okay, we knew about that. He mentioned that in Discovery. Foreign futures. Once again, you get really lucky, and maybe they admit to having foreign accounts. Bank shares of Eastern Kansas. Bank shares. What does that mean? That term, bank share, when you see that, that usually means that is a bank holding company stock. It's probably obviously it's some kind of small bank, but it only produces $6 in dividends, but those small banks in small towns can be worth a lot of money. Maybe he inherited this recently, and wife didn't know about it, but he's got to put it on the tax return because that's one of the few things the IRS does well, is actually pick up on interest and dividends, because all of these different other entities, all this information you see on here has been reported to the IRS by these entities. So First Tennessee has sent in a 1099 to you, the taxpayer, and to the IRS. So the IRS has a copy and is looking to see $1,143 on that tax return. So. But some of this information doesn't come through on a 1099 form, but some of it does. And so, but all of these are going to tell you that there is an asset there, or at least certainly give you banks to subpoena, so you know where they bank now, if you didn't before. Now here's the Schedule C. This is the profit or loss. This is a sole proprietorship business. And on your handout you're on page 2 now. Now on the sole proprietorship. It's an unincorporated business, of course, but it's also, if you'll look here, a sole member LLC also files on a Schedule C. So this particular guy, he can't spell, Consulting Services RS LLC, but it is a sole member LLC. In other words, he's the 100% owner. That's where the LLC of 100% owner is supposed to file.